Right. Good evening, good morning, everyone. Welcome to Cambodia Retail Flash Survey webinar by CBRE Cambodia. We are very delighted to be here with you all today. Thank you very much for tuning in early in the morning of Wednesday. I know everyone must be very busy getting on after the long holiday last week. In this webinar, there are two presenters, both myself, Kinkesa, and James will be speaking about the result of the survey that we did on retail's response on the COVID-19. So I should highlight it as well. This is the first surveys of this kind that we have done in Cambodia. CBRE, our CBRE colleague elsewhere in the region have done several of this. It's very interesting to do this survey in a time like this. We have since the beginning of the year, we have seen retail has taken quite a big hit from the changes in the business environment due to the pandemic. It is really interesting to see how and to understand into more in depth into what retailers are thinking and are planning for the upcoming or the changes further into the sectors. So we hope you will enjoy this webinar, and if you have any question, please feel free to type in your question into the Q&A section of this Zoom. So let's get started. A quick glance at our survey's result showed that the major concern or the top thing that our retailers are thinking about is the loss of sales as the major concern, following by other concerns which will be discussed in more detail in this webinar. Interestingly, up to 92% of the respondents still either fully or partially resume their business. This is quite interesting if you compare to many others countries in the region where lockdowns are happening in many cities. Unlike then, Cambodia hasn't got any major lockdown, a complete lockdown, despite some order to close some type of retails during March and August. But other than that, majority of our retail stores are still operating. Up to 85% of the respondents expect that it will take at least 6 months for their sales to return to the pre-COVID level. This is quite a interesting pattern because as this survey was actually taking place in August, so most of our respondents actually expected that the sale will come back early in 2021. Another interesting trends that we observe throughout the survey is the increasing presence of online platform using among our retailers. Up to 96% of the respondents has planned to increase their investment into some sort of online platform or delivery apps. Majority of them are the F&B businesses. We have seen a significant growth in the activity of online delivery service inside Phnom Penh. You can witness it every day through, on the street. We have seen different color of delivery man in the traffic. That's quite interesting. On the store networks adjustment, 31% of our retailer has been impacted in terms of a decision in store expansion. This is quite a significant number, but if you compare to the result from our APAC survey, this is still very low because the sorry, the figure from APAC is reported up to 95% of the respondents being considering to to change the plan in terms of store expansion. Another interesting part is that we see up to 58% of the respondents plan to consolidate their brick and mortar store networks, and up to 50% plan to decrease their investment in the store experience. Before moving on to more detail of the surveys, I would like to present the profile of our respondents and the survey profile. So this survey was conducted for 3 week times in August 2020. We received a total respondents of 25 retailers. We should highlight that this is could be a limitation for the result of the surveys because some of the results could be skewed toward a certain part of the answer in the survey. Anyway, we are quite happy with the mixture of the respondents that has joined the survey. Majority of them are from the experience-based retails, particularly the F&B and entertainment sector, and some others are from product-based, including fashion and apparel, sporting goods, grocery, and other retail type.
So just to reiterate on that point, this is the first time that we've run this survey. So we expect these numbers to change over time, but we still think that the results out of the survey that we conducted back in August are interesting to the market and to other retailers. The retailers who responded to us, they will be getting the report in more depth, so that they will get that earlier, so they can see some additional results. And obviously, we will be running this again in the near future, so that we get a deeper pool of data next time, and I'm sure that the results and continued engagement will deepen this. So please watch out for this. If you are a retailer, we'll be sending this out again in the early part of next year. So the more engagement, the better, because it will strengthen the results that can be used across the market to help to benchmark how things are going for everyone.
That's right. It will be very interesting to see the difference between the survey that we're doing in Q3 this year and Q1 next year, as I hope that will be in a different phase of development in terms of pandemic management. So looking forward to see the results in Q1, and please join us so that we can understand more from your side, your retailers here.
And just to highlight as well, the survey respondents broadly here follow the market. So at the current time, F&B really dominating what we're seeing out of Phnom Penh and the activity level and the growth in the sector. So whilst 56% of respondents to our survey were F&B, it is a very important part of the market at the moment. So it's not too surprising that it dominated. The other sectors, clearly, there's only limited results from them. So please take the survey results for sectoral divisions with a pinch of salt, because sometimes the pool of information coming back is quite limited, sector by sector. But we still think that it's an interesting take on what's going on, and that it's valuable for everyone.
So without any further ado, let's have a deeper look at the findings of our surveys. The first and foremost question we ask our respondents are, what are your key concerns regarding the COVID-19 pandemic? This is a very important question in order to understand what's on top of their mind. So the findings of the surveys has reported three major concerns from our retailer regarding the loss of sales, ensuring safety up to to meet the safety standard required by the local authority, as well as meeting the financial obligations. So as you can see, we have attached some of the pictures that we seen in particularly the experience-based retail, particularly the cinemas. They're very concerned in terms of reopening after an ordered closure during March and August. So obviously their revenue has been impacted, but the continuance of concern over safety is still on top of their mind. Just last week we have seen another order to close these type of retail again after reopen for around 2 months time. So James, from your experience working directly with retailers and landlords, have you seen the same, have you observed the same conversation as the survey finding?
Yeah, no, actually it's broadly reflected across both parties. So both the landlords and also the retailers are feeling the same stresses and strains. It's good to see them working together to try and overcome this. So where they have been able to, we've seen a good level of pragmatism from the landlords in aiding their tenants with some financial support. And we'll dive a bit deeper into what the respondents have told us about that and that response a little bit later in the survey. But I think overall, the developers have had similar concerns. They've been worried about reductions in footfall, how that's going to affect their tenants, what it does to their cash flow and their income, as well as trying to ensure safety of their team, of the customers who are coming into the mall or the shopping centre. Obviously, these things are at the top of their priority list at the moment. And from the retailers as well, very much trying to ensure confidence for their customers by having appropriate safety protocols in place, but obviously also highly concerned about how reductions in footfall are impacting. We're still seeing from Google Mobility that retail is between 10 and 20% down from the pre-COVID baseline in terms of footfall. Whether that metric is particularly accurate does seem to broadly follow the trends, and obviously it varies depending upon location and retail format. But it's still a considerable concern for many retailers, as is the general lack of energy in some of the leasing markets, and particularly if they're attached to perhaps a residential development or they're attached to commercial development that hasn't been leasing up maybe quite as quickly as it would have done pre-COVID. If a retailer's gone in slightly early, it can cause some concern for them. They will look a lot harder, a lot closer about opening timeline, and particularly around CapEx to try and overcome some of these issues that we're seeing. So that's creating some interesting dynamics in the retail leasing market.
Yeah, of course. I know that all of those factors are really important, but most of the retailers are still concerning in terms of footfall into retail destinations. In regard to that, have you seen any measure been taken, for as a short-term release or respond to the drop of footfall?
Yeah, clearly the retailers and the retail landlords are working together. So we've seen more promotions happening in organized retail centers, and and more of an attempt by those landlords and the centralized operators to try and just do something a little bit different, diversify their offering, think about different ways of marketing the mall and the retailers to pull in more people, doing things with their car parking fees, for example, just to make it a bit easier for people to come in and shop for an hour or two. They have been thinking and working a lot in the majority of cases, so it's good to see that has been able to happen. I think still Cambodia has relatively got away with this relatively lightly so far compared to our regional competitors, our regional comparables. It's interesting to see how they've had to adjust further and quicker than Cambodia's had to do. But clearly, this isn't over by any stretch of the imagination. The last 2 weeks show us that things can still flare up. Even the extent of the US election and its impact on social media has had a knock-on impact into how people can engage with social media and social selling. So it's been certainly eye-opening to watch all of these different trends combining on the back of COVID-19 having exacerbated and forced through change at a quicker pace.
Yeah, it will be interesting to continue watching as well. Okay, moving on to our next question. Besides the concerns over the changes that's been caused by the COVID-19, a more important question that we asked our retailers their decision, their consideration of their sale networks, particularly the stores and online penetration. So the survey has shown that, interestingly, really interesting, that up to 48% of the retailer actually plan for more store or larger footprints. This is quite an interesting trend if you compare to the regional response, which will follow in the next slide. The rest has stated that they will consider to take fewer stores and smaller footprints, while up to 24% will increase their online sales capacity. So having a closer look at a broader look, at the regional level, Cambodia is focusing more on the stores and physical stores and footprints more than the rest of the country in the region. What's interesting to see in this graph is that our market is quite comparable to what you see in India, where quite a significant amount of respondents also considering for more stores and larger footprint. On the online retail sales penetration rate, although we do not have the information for Cambodia, we think it is particularly still low compared to countries in the region, significantly caused by the absence or lack of improvement in online sale infrastructure, which is gradually improving right now. I would see a lot of private companies and as well as the local government is putting more attention into establishing online sales infrastructure to facilitate the sales. Banks in particular have been very active and in providing online financial services, and we have seen many retailers who has not take on online sales or online payment at all before has now turned to online payment in some way.
So really good to see that everyone in Cambodia is very definite. We had very no responses of not sure, which is pretty amazing compared to the region where that was quite a common response in a much larger data pool. So everyone in Cambodia has a definite idea of what they're going to be doing, which is great.
You're very sure, yeah. Looking closer into the industry breakdown, the response that we look at earlier on the more store and larger footprint expansions are majorly from the fashions retailers and particularly entertainment as well. I think James can provide more insights on why fashions retailers are interested in expanding footprint in opposite to others retailers such as F&B.
Yeah, well, still fashion remains relatively underdeveloped compared to some of the other sectors here, and especially compared to the regional comparison markets. If we look at the F&B sector, it's certainly more diverse and developed. So there is a clear difference there. We would expect F&B to be in that kind of range with a lot more online focus during this period of time. There's still some looking at growing footprints and increasing their portfolio. But fashion at the moment, we are seeing a drive from a number of groups to consolidating their brick and mortar offering. Now, clearly this pool of data is small, so we can't read too much into this. Overall, the market does appear to be following these trends, but when we are looking at the stock that's available for fashion retailers, it's still relatively limited when we consider that the market growth in terms of supply has been very much focused on community malls. Those aren't so well suited to fashion and apparel. When we look at markets like Thailand, far more developed, the community malls there very much focus on groceries, a bit of entertainment, and then F&B forms the majority. That seems to be the format that Cambodia's community mall market will head into, and it doesn't leave a great deal of room for fashion and apparel in that sector of supply. So that market's still chasing down opportunities for expansion. It's good to see, definitely, but maybe read a bit more into F&B, I think, in terms of these results anyway.
In terms of brick and mortar space for the fashion industry, you're saying that community mall are not quite the format that favorable for the industry. But actually, we have seen quite a lot of community mall coming up into the pipeline. So, what should be left for as an option better suited for the fashion industry?
The reason that community malls don't necessarily suit fashion so well at the moment is because fashion retailers that generally want to be located close to multiple outlets that are offering a similar range, so that their customers have got a good base of comparison and options, and it will allow them to attract more footfall. So just having a few fashion retailers in a relatively small community mall development isn't necessarily conducive to that, and that is probably why they haven't located in those. But also community malls, just a general format of convenience and access into local populations with a smaller catchment, much more appropriate for F&B. And the regularity at which F&B purchases are made, whereas when we're looking at fashion and apparel purchases in Cambodia in particular at the moment, given the retailers that we've got on the scene at the current time, it doesn't necessarily fit that mold.
Yeah, what I'm trying to understand here is whether fashion still like or prefer to be in a standalone stores, or they're also considering moving into shopping centers, such as in the format of, say, shopping malls.
Yep. At the moment, the choice for fashion retailers isn't particularly broad, right? Because we don't see a huge number of shopping mall completions happening. So for the majority at the moment, if they are looking at expanding within the next 6 to 12 months, their options for shopping mall expansion are still relatively limited. There are obviously some coming, and no doubt they will form a major part of the tenant mix. They have to. But in the meantime, while they're waiting for that, their expansion needs have to be met, and standalone therefore forms an important part. But generally, fashion retailers looking for the right kind of shopping mall environment, because you can focus footfall more, you can focus it easier, and also you have more clarity over the quality of your neighbors and what they will be selling. So a more organized retail environment is appealing to those retailers, but yeah, it's still developing out, because the format that we've seen completing in the last 12, 18 months has predominantly been in the community mall segment.
All right, moving on to another slide, which more focused on the digital sales. This question we asked, what has been the role of digital sales channels, including online stores and delivery apps, in your business before and during the COVID-19 pandemic? So the majority, up to 64% of our respondents, has already been exposed to online sales, either partially or wholly. But what is interesting is that after, during the COVID-19 breakout, we have seen an increasing number of retailers being introduced to digital sales to compensate of the loss of the physical sales. And more businesses are turning digital sales to become their core revenue as well, up to 21% of them. Breaking down into further into industry coverage, we've seen that taking on digital sales as their core business are majorly the F&B retailers, and followed by the sporting goods, as shown in this small photo at the right bottom of the slides. This is just an example of online penetration of F&B retailers, which are increasingly active right now. James, on this digital sales, and particularly on F&B in digital sales, what do you think is the major factor or has been influenced by?
Yeah, the convenience, I think, of these delivery apps has been a big driver. You can pay online or with a card. You don't have to run off to the shop. You can deliver your coffees for your colleagues quite quickly, and we see that a lot here at CBRE. I think there's delivery happening every few minutes at our office at the moment.
Mostly bubble tea and coffee.
Yeah. So that's been a big driver in the proliferation and growth of those apps. The marketing that they've been doing and the network that they've created has certainly driven the rise in this sector and the penetration of it. As you can see from the photo that you've put on the slides, Kinkesa, the retailers still focusing on their high street locations as a hub for delivery infrastructure, which so far, they've got the physical assets, and that's certainly being utilized for this. When we look more broadly, and we had a good discussion about this during our previous Q3 update, I think, around cloud kitchens and dark kitchens. They look like they might come in next year as efficiency and needs to be driven up in the sector. At the moment, the profitability model for all of these, colloquially, we hear that might be a bit challenging for the retailers, but also for the delivery apps. So key to watch this is obviously a sector trend that's not going anywhere. It just seems to be growing and growing, and we've really seen that jump over the last 9 months.
Yeah, just to echo you on that, James. Actually, we just had a I just had a recent conversation with our retail leasing colleagues on. We noticed recently some of the food chain business has already, scaled down in terms of their footprints and has turned into digital sales, and more promotion and offering are being advertised for takeaways and deliveries. So I think, do you think this could be a trend in the upcoming year?
Yeah, absolutely. In-store experience at the moment, as we saw from that summary page, fewer are looking at investing in that. And that's good because footfall remains an issue. We've been looking at how the format of retail is likely to change, and the size of the retail stores demanded by particularly F&B has reduced, and a lot of that is because their sales channels have become more mixed, so they don't necessarily need such a big footprint to service the customers that they've got. Obviously, that varies by the type of retail format that they are located in. But there are a few infrastructure things around this that would help, I think, to deliver that, and particularly when we look at shopping malls or community malls and having delivery drivers taking up parking spaces and walking through the mall all the time maybe isn't the way that things will go eventually. But for now, we're still in that development phase, so people are finding their feet and working out how this is going to go moving forward. So it's certainly an interesting trend to keep an eye on, and obviously we'll do that through this survey, but also through the conversations that we're having.
Yeah, hopefully we can find out in the next survey as well. So moving on to the next slides, further into consideration on leasings. This is to continue from the digital sales activities. Now we're looking at the physical stores or the brick and mortar stores. We asked, how have your real estate leasing decision been impacted? Up to 72% of the respondents saying that their expansion plan or new opening plan has been put on hold. I think this is aligned with most of the market, not only in APAC, but probably in the rest of the world as well. When it comes to decisions on expansion, there are too much uncertainty at the time of this survey, particularly, and even now it's still think some of the retailer are still considering on whether or not to expand and how large, and more importantly, how they're going to expand. Do you observe the same thing when you speak to our retailers?
Yeah, absolutely. I mean, it has changed over the last 6 weeks since, longer since we conducted the survey. Definitely, we have seen a bit of planning now coming in for 2021 and a bit more confidence returning into the sector. So I think if we ran this again now, we would probably see that number reducing. But the strictness of the evaluation process is certainly still a key part. They want to make sure that they're making the right decision, and the developers have got to and have been responding to that to help that process along.
Normally, what has been the consideration while retailer are inspecting or considering a space?
Certainly looking at the size, as we discussed previously, but also trying to understand the demographics in greater depth than previously, the potential of the location for the future, and their ability to reach out to a wider audience from that. How the landlord might interact with them from the marketing perspective, looking at their commercial terms in more depth. But really quite interesting to see the split difference between experience-based, so entertainment and F&B occupiers, and also product-based, where I think in both sectors it is that CapEx issue that has reared its head stronger than many others over the last couple of months, where retailer is looking to grow. They are trying to find ways of doing that at a slightly lower cost than before, through support from the landlord, maybe through additional incentive. I don't think it's changed too much, but definitely some easing on that expansion on hold. Maybe they aren't making the decision right now, but certainly before the end of the year, we can expect some more decisions to be being made and some planning done for the next year.
Mm-hmm. All right. The following slides is showing the discussion or interaction between our retailers and their landlords. So we asked what has been discussed among them. The first that up and major foremost concern is the rental reductions that has been discussed. So up to 76% of our respondents has discussed about rental reduction with the landlords. And among the new leaser or new tenants, up to 44% of them has already requested for longer rent-free periods than the usual market conditions. And the existing tenants has also requested rental holidays in some of their stores. After that, we also see a discussion on joint promotions and sale campaign, as we discussed earlier. And a few others have considering on change to gross turnover only. In response to the discussion, we've seen that up to 84% of the respondent has received some sort of accommodative measure from their landlords, but only 76 of them, only 8% of them has been satisfied with what being discussed, and 76 others still think the landlord can do better. So what is your take on this, James?
I think that's a sign of a typical market. A landlord isn't necessarily going to go as far as a retailer wants when negotiating a rental reduction, which is the majority of the discussion that's been had during this period of time, because their aim is always to their job is to make rental return on their investment. So it's surprising that 8% of our respondents said yes, they are satisfied with the measures taken by their landlord, but I suspect that those are people who got turnover shares or some other different relief measure rather than a rental reduction, because of course a landlord could always go further from a tenant's perspective, and the landlord always thinks that they've gone as far as they can. So not surprised by the outcome of that question. I think that both parties have shown a willingness to talk and work together, and that has been quite clear from the market. Having those conversations early before a tenant starts to struggle is always important, and consistently having those conversations, as well as taking those other measures like the joint promotional sales campaigns, clearly pretty important for helping everyone out through this period and attracting the footfall back.
Yeah, I think it's also interesting to look at to zoom out a little bit and look at this from a regional perspective. It's clearly aligned that majority of the respondent has even after receiving some of the relief measure, a lot of them still think there can be more can be done in terms of the relief. It's aligns elsewhere in Hong Kong, in Singapore, as well as other Pacific countries, and even in Thailand, where retail are very active. Still 48% of them think that more could be offered by the landlords.
But interesting to see actually that Cambodia sits at the top end of the landlord's level of having accommodated tenant requests. Even Singapore, 10% of respondents to our survey answered that they had no support whatsoever from their landlord. So Cambodia is better than that, nearly. Yeah. It's about that level. And compared to the Pacific, Cambodia's landlords have been more accommodative. So satisfaction levels are similar to what we're seeing in Singapore, but certainly in terms of the relief measures provided, at least to some extent, they are stronger than we've seen in closer market comparable like Thailand and India as well, which Cambodia actually seems to track relatively closely in terms of trend development. Yeah.
That's right. Besides this temporary relief, we also look into the longer term development in retail sectors. We asked whether their business has been closed during the COVID-19 outbreak, and then we asked how long you expect the sales to come back to the pre-COVID level. So to the first question, it's interesting, like we discussed in the executive summary, up to 92% of our respondents still resume their business either partially or fully, and only 8% has closed all their stores during the pandemic. I should highlight it as well that time-wise, this survey was conducted in August, where after the tension period, I think in Cambodia it was between March to May, where a lot of people were working from home, very low footfall in retail centers, and continue in June. We have seen footfall picked up again and gradually improve up to right now just around 15 to 20% below the pre-COVID level, as James discussed. On the later question on when do you think the sale will return back to normal, majority of the respondents, up to close to 80%, think that it would take at least 6 months or more to for the sales to return. So this could be actually looking positive into 2021. James, have you seen any changes in expectations since the time of the survey conducted?
No, actually, when we conducted our Q3 surveys, the response on a different question, but also on returning economic growth, it was a similar timeline from everyone. So I don't think that we've seen a significant shift. I think if we went out and did this today again, then we'd probably get the same answer. There might be a slightly more who are saying 3 to 6 months. I think there are a few retailers out there now who are looking at their numbers and saying, things are starting to improve a bit stronger than we have been seeing, which is good. I think that market has started to stabilize. People are getting used to how things have been going for some time, and until we see a significant shift in terms of people's confidence to spend money, so economic growth improving, but also confidence to go out and not sit at home, we won't see those numbers moving towards the left-hand side of this chart too much more than we do now. So I would expect a similar result, but maybe a few more in 3 to 6 months and a few less in more than 12 months.
Yeah, I was about to ask whether this is motivated by general positivity, or do you think there are particular development or improvement in 2021 that brought more confidence to the retailers?
I think just general market sentiment. I mean, Cambodia's retail market is not particularly driven by tourism, so we wouldn't be saying that tourist arrivals, apart from up in Siem Reap actually, but that's not gonna, the travel restrictions aren't necessarily gonna impact too much. I think really here we're looking at general confidence levels of consumers as being the main driver for the return to normal sale levels.
Okay, all right. We're moving closer to the end of the deck now. But before that, we have compared the expectations of sales recovery by industry. The presented results in these slides are the comparison of Cambodian market versus the APAC. Overall, there has been some alignment, but there are also some differences as well. For example, here in Cambodia, we're expecting F&B to be the fastest recovering sector, and entertainment could come at last given the recent development of the sector. Whereas in the regions, F&B and entertainment are somewhat in the middle, and grocery and beauty and cosmetic come first. What do you think has motivated this change, James?
Well, for Cambodia, it's about who is patronizing those various different sectors. So if we look at entertainment, is impacted at the moment in particular by the government restrictions on entertainment venues opening, and we also saw that earlier in the year. So there's certainly some caution from that sector. I think it has improved actually over the last few months, and people are now more confident, but certainly still wary of commercial terms that might penalize them if they have to go through the same scenario again. Food and beverage is driven by younger audiences here in Cambodia predominantly, and obviously it is a pretty aggressive sector here, even compared regionally. So I think that's just held up a little bit better. Groceries, yeah, also towards the top of our list of optimism. It's definitely a growing and deepening sector. We've seen more of a focus from the grocery retailers on that online business rather than necessarily on floor plate, but definitely still some room for growth there, and just finding the right kind of space for expansion.
Yeah, I think we have discussed a lot on development in F&Bs and the improvement in infrastructure that has aided this sector so far. Has been most interested from many retail experts as well. Okay, moving on to the last slides of the presentations is looking further into the long-term shift in digital market. We asked to what extent do you expect there to be a shift in your business strategy after the COVID-19 outbreak. We gave our respondent a number of activities or actions and asked them to rate whether they plan to increase or decrease or do nothing to the actions. So interestingly, up to 96% of the respondents noticed the importance of online retailing and would like to increase their investment into the channel, and up to 52% of the respondents may decrease their demand in the brick and mortar retail space. Somewhat in the middle, particularly for F&B, we're seeing that the utilizing in cloud kitchen still broadly uninterested among the F&B retailers. A lot of them are still focusing on expansion of online sales, and the use of social commerce has also been a major interest for the retailers. What do you think could be different? If you look at different sectors of retail chains onto these actions, do you think particular actions are more beneficial for particular sectors?
Yeah, clearly some services like food and beverage are much easier to use online retailing, whereas when you look at haircuts, it's slightly more challenging to do that. So there is a clear difference between the sectors, but it's interesting to see that everyone is prioritizing that as a growth tool. And therefore they must believe that the population is ready for the expansion of online retailing into a higher degree. I find the results of this somewhat contradictory to our earlier thoughts from the retailers on what they're going to do with their stores and their store footprint. 4% increase in demand for brick and mortar retail space seems to be very low, and I would expect that perhaps this was a question that maybe didn't get through to every retailer in the right way, or their priorities are just shown here more strongly than in our previous questions. So certainly that online factor has been driving their future investment plans, where they plan to put their money, whereas brick and mortars is clearly at the bottom of that list here, which isn't good news for retail developers, but it does allow them maybe to look at some of these results. I think colloquially we've known about that, been thinking about it, and the developers and landlords have been having conversations about this for some time. And even when we were doing events last year, this was a trend that we've been seeing across APAC generally. It's just that COVID's exacerbated that across retail sectors for the majority of sectors anyway. So it's not that surprising to see that. I think the numbers are a bit extreme here, and it's unlikely to be so stark. Instead, it's more about diversification, in my view. I think that that's more likely to be towards the top of retailers' agendas now. They've seen the risks that COVID-19 has shone a spotlight on during 2020, and trying to find ways to mitigate that. Obviously, investing in their online presence and omni-channel retail is important for them for the future. It's a potential source of new revenue, reaching new audiences without the capital expenditure of brick and mortar retail. But brick and mortar retail stores have still got a very strong place here in Cambodia. We can see that there is still demand. You go to Aeon Mall at the weekend, it's just as busy as it was 9 months ago. So I suspect the numbers are a bit skewed here.
Yeah, obviously the sample size is quite small, and we hope to get more pool of respondents in the next survey. So please do join our next survey. So we're sending all the surveys out in Q1 2021. Please watch out for that. As well, just to echo James on the changes in online or digital market. I think majorly Cambodia has been benefited from the younger populations, which are very adaptive to new changes and welcome to new technologies and consumer education. So it's interesting to see as well how quickly Cambodian consumer has changed over the past years. All right, we have come to the end of the presentations. We now take on questions. We have already seen some questions sending in. But before that, just to remind you again and present to you here our contact. So myself and research team will be happy to answer any question that you may have on the result of these surveys or other publication that we have sent out. While James, Ludovic, and Sumay will be happy if you happy to reach out if you would like to discuss on retail inquiries and other services. So let's take on some questions from our audience. We already have some here.
Okay. First question. Do you know what percentage of retailers surveyed rely on local shoppers in comparison to tourist shoppers? Well, at the moment, it's almost all local shoppers. It varies very much by geographic, where people are. So if you look at CBRE, retail there predominantly held up by tourist shoppers. And if you take a look at what's happened to that market and the retail that is there, we've done a number of surveys in CBRE recently of the retail sector, and there's been quite a few closures. So we that's been hit very hard, and we're probably looking at northwards of 50% tourist reliant in that market. Whereas Phnom Penh, we might be looking at 10 to 15% of short-term and longer-term stays, but certainly not too significant. I mean, the retailer's still finding it difficult. We can't shy away from that. But overall, the local demand is still there. We see that in the Google mobility numbers as well. Maybe that's a decent indication.
Yeah, another question closely related to this previous question is whether the less traffic in retail shops or malls, I mean, due to fewer local buyer or visit fewer expats.
I think varies depending on, again, location is a big factor there, but also retail format and also the type of retailer that we're dealing with. Clearly, local demand has been the big shift, and the retailers have moved their attention away from perhaps some of the higher paying customer brackets, which are expats. Some of those have left the market, as well as the tourists, obviously, and switched it more towards locals and trying to capture that. So perhaps part of that is about online, trying to make sure that the younger Cambodian audience, which is a big driver of retail sales with its higher level of disposable income, and increased engagement with the banking sector and online payment and social media has driven that trend.
Another comments from our audience here. It's not a question, but a comment rather. Say that 52% it decrease in brick and mortar retail demand versus an increase in new malls upcoming years. So we wish to highlight on that as well that the results of the surveys are majorly completed by the existing retailer that are already presented in Cambodia. Besides this, actually the information data that we presented on our Q3 market update has also shown that the trends of new retailers and some of the store expansions in Cambodia continue. It could be contradict here in terms of results, but again, we just highlight smaller pool of respondents that we have here in these surveys. And like we said many times, we hope to see more in-depth information in the next surveys, and hope you all can join.
I would also say that question isn't time specific. So perhaps they're looking at trying to decrease their portfolio this year, but is that a long-term aim or a medium-term aim or just a short-term aim? I expect that for the majority of retailers in Cambodia, it's probably just a short-term aim, and they hope to be back to expansion mode relatively quickly as soon as sales return to the level that they need. Going back to the tourism question, we've had a follow-up on that. Future projections for any sale increase after a vaccine or the end of COVID, 6 to 12 months' time. From a tourism perspective, I think there is potential for a bit of a bump there, given that there's probably some pent-up demand from braver travelers, the more intrepid travelers, to get out into other markets, but also the return of some foreign workers and some additional expats coming into Cambodia. But still, the majority of sales are going to have to be driven locally for the immediate future, purely because things like the airline infrastructure really isn't there. It won't be coming back by the look of it for some time. So there are some challenges to building that capacity of tourism again, at least within a short period of time next year. Some economists were predicting that things might be back towards normality by the end of next year, but others are saying several years of delay to the return to pre-COVID level of activity and global travel.
Yeah, I think obviously it will be uneven recovery across different sectors. In retail, particular, even in retail, there will be different or speed of a recovery across all type of retailers as well. All right, we have come to the end of the webinar. Thank you very much for your attention during this webinar and for sending in questions. We will come more questions if you'd like to get in touch. You have all our emails, so feel free to reach out. So thank you again. Hope to see you in the next webinar, and please watch out for our next survey. You'd like to make your voice heard. Thank you.
A big thank you to Kinkesa and the research team here at CBRE Cambodia for conducting the survey and putting together the presentation and the deck today. The deck will go up on our website in due course, and do please follow our social pages on LinkedIn and Facebook, and we'll be publishing more insights in the coming weeks. So thank you all very much, and thank you for joining, and hopefully any retailer on the call, please join the survey next time. We will make a lot of noise about it in Q1.
Thank you. Have a good day.